Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. World markets halted multi-week rally after investors began to factor in the implications of higher tariffs on inflation and a sharp slowdown in private sector activities in February. Also, the lack of immediate resolution on Russia inflation conflict weighed on bond yields and commodity markets. Market mood soured on Wall Street after the latest FOMC meeting minutes confirmed that policymakers are not ready to lower rates unless inflation is on a sustainable downward path. The slowdown in U.S. private sector activities in February, driven by uncertainty related to federal government policies, also weighed on the market in Friday's trading, extending weekly losses and halting a 5-week market rally. Earnings dominated local stock markets around the world as several leading companies reported results this week. U.S. housing market continued to paint mixed picture amid affordability issues, elevated mortgage rates, and rising home prices. Existing home sales declined 4.9% from the previous month and rose 2% from a year ago to 4.1 million units in January. The median existing home sales price jumped 4.8% from a year ago to $396,900, the 19th consecutive month of annual price increases. The U.S. home building permits declined in January after snowstorms and freezing temperatures disrupted activities. But the housing starts slumped on a monthly basis in January and fell little on an annual basis. Housing starts declined to a seasonally adjusted 1.36 million, a decline of 9.8% from the previous month's revised 1.51 million and 0.4% below the last year's 1.4 million units. Japan's annual inflation accelerated in January and rose at the fastest pace since January 2023, meaning about 2 years. The annual consumer price inflation accelerated to 4% in January from 3.6% in the previous month. The food price inflation advanced to a 15-month high of almost 8%, and electricity costs stayed elevated at 18% with the removal of energy subsidies since May 2024. The core rate of inflation in Japan increased to a 19-month high of 3.2% from 3% in December. The monthly core inflation rate slowed to 0.5% from a 14-month high of 0.6% in December. In other economic news, Japan's index of manufacturing activities contracted for the 8th month in a row as both output and new orders growth continued to shrink. In addition, the report showed that business sentiment deteriorated to the lowest level since 2020. New and existing home prices in China continued to decline in 70 largest urban areas. However, the decline in 4 largest cities slowed in January. China held steady its key lending rates for the 4th month in a row in February. The index of private sector business activities in the Eurozone in February confirmed ongoing weakness. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered at 4.45% as investors awaited clarity on debt ceiling negotiations and factored in fewer and smaller rate cuts in 2024. Texas crude oil prices edged higher by 2% to $72 a barrel amid supply disruption worries in Russia and improving demand outlooks around the world. Natural gas prices in Europe dropped 10% to 47 euros per megawatt hour as storage levels dropped to 43%, and Germany, France, and Italy proposed to lower the EU mandate to rebuild the levels amid tight supply conditions. The euro edged higher to $1.05 ahead of the general elections in Germany this weekend, which is likely to favor a new coalition government headed by the Conservative Party. The yen eased to 150.5 against the U.S. dollar after the latest inflation data supported the Bank of Japan's case to continue with its rate hike campaign. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite halted a 5-week rally as investors dialed down rate cut expectations in the imminent future and also worried about the potential slowdown in business activities. European markets halted a 6-week-long rally ahead of the Germany's general elections and weak growth in the private sector activities. The Nikkei 225 stock average halted a 4-week-long rally after the yen advanced amid rising prospects of a rate increase in March. Hong Kong and China indices continued their advances after Alibaba Group's earnings fueled demand for artificial intelligence-linked stocks. Indian market indices extended losses to the second consecutive week as foreign investors trimmed their holdings and chased tech stocks in China. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Walmart said global e-commerce sales increased 16% from a year ago, but net income edged lower in the fourth quarter, and the retailer guided slower sales growth in current fiscal year. Alibaba Group surged almost 7% after the Chinese e-commerce company reported an 8% revenue growth in the latest quarter, driven by the expansion of artificial intelligence and cloud services. Arista Networks reported a higher-than-expected revenue and earnings in the fourth quarter and guided a higher revenue in the first quarter of 2025. Baidu, China-based search engine and technology company, said fourth-quarter revenue declined despite an increase in enterprise and cloud services sales. The Chinese search engine operator returned $356 million to shareholders in the quarter. Glencore announced a stock repurchase program of up to $1 billion despite the mining company's net income swinging to a loss in 2024. Anglo American reported weak financial results amid persistent weakness in its diamond unit, De Beers. The company also wrote down almost 40% of the price it paid to acquire the diamond unit just a few years ago. Carrefour said net annual income dropped and the company plans to cut additional costs. Mercedes-Benz Group reported a fall in the fourth quarter earnings to 2.5 billion euros and launched a new plan to cut costs amid rising competition from China and slower sales in Asia. HSBC Holdings, the London and Hong Kong-based bank, reported higher annual revenue and profit, increased its dividend, and announced a new stock repurchase plan. Standard Chartered Bank announced its plan for a $1.5 billion stock buyback after annual profit almost jumped 20% to a record high. In the week ahead, the U.S. is set to confirm its second estimate of the fourth quarter GDP growth of 2.3%. Goods trade balance, the new home sales, durable goods orders are also expected to confirm sustained economic activities in the U.S. On the earnings front, investors are awaiting results from NVIDIA, Salesforce, Home Depot, Lowe's, and TJX companies. In Europe, investors are awaiting the result of general elections in Germany on Sunday. Moreover, inflation reports are on schedule from the Eurozone, Germany, France, Italy, and Spain. On the earnings front, investors are looking forward to results from Smith & Nephew, AXA, Swiss Re, Pearson plc, Allianz, Holcim, BASF, Rolls-Royce, Saint-Gobain, and Telefonica. In Asia, investors are looking forward to the release of industrial production, retail sales, and housing starts updates in Japan. In India, investors are looking forward to the second update of the fiscal third quarter GDP growth. On the earnings front in Asia, results from Shangri-La Hotels, Mandarin Oriental, Petronas, Genting, Singapore Land Group, New World Development, Ichitan Group, Schaeffler India, and Malaysia Airports are also awaited by investors. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rudera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see